Welcome to Target Market Insights, the multifamily and marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Welcome to Target Market Insights, the multifamily and marketing show. I'm your host, John Kasman, and I want to thank you for joining us for another great episode. Now, if you're enjoying this show, do me one quick favor and leave us that 5-star rating and review. It's really important to help other people know the quality of information that we have on the show, and it's very helpful for us to spread the word. Now, today we're going to be talking to Whitney Ward. Whitney Ward is an exceptional leader and a highly driven entrepreneur. She is the founder and principal broker of Intuitive Management Partners. As the principal broker, Ms. Ward identifies and defines overall company growth initiatives, business strategies, partnerships, and collaborations. Let's welcome to the show, Whitney Ward.
Hey, John, thanks for having me.
Absolutely, Whitney. Thank you for coming on. So I went over your bio at a very high level. Why don't you take a minute or two and give us a little bit more context?
Yeah, so I'm, like the bio said, I'm the principal broker and founder of Intuitive Management Partners. We're a multifamily investment management company. We provide a full-scale, full-service approach to investing in multifamily assets. So what we do is work alongside our investor clients or partners and help them acquire the asset. And then we take them through the investment strategy, through the management and operations of the property, and then finally to the end goal, which is the disposition. So we provide a full-scale, full investment cycle service for multifamily investors.
No, that's amazing. And for those who are maybe, newer into real estate, newer into multifamily, that don't necessarily understand the benefits of what you just described, can you just talk a little bit about maybe more of the traditional model, especially when it comes to the broker side of the business?
Sure. Yeah. So it's funny. I am a broker, so I can definitely walk you through that side. So from a broker perspective, obviously you're, prospecting for listings. You get a listing, and then you're seeking buyers to buy that listing. So what we do is help buyers acquire properties through the broker at the right price. So we can underwrite that deal for the buyer based on target investment return goals. So depending on who that buyer is, their cash on cash return might be different, but we underwrite the deal based on what they're looking to receive in returns. Once we identify that property, then we're the property management company. So with these larger multifamily assets, you're not typically going to see an owner operator managing that property directly themselves. I mean, you have a 50, 100 unit property and you have 50 to 100 residents calling you about a toilet issue. I mean, that can get very overwhelming. So you typically are going to hire a third party property management company to come on and manage that asset. So we have a full scale management team built out to where we handle anything from 50 to 200 units in size, something smaller on the 10 to 12 unit space. I mean, we can support, but that's going to be on a location basis. The smaller the property, the different, it's going to be a different strategy. And then once we take, you as an investor or buyer through the management holding period, or then we'll position the asset for disposition. So typically on that end, if you're not using us to broker the deal on the back end, a lot of times we're not that person or that team. It might be the broker that initially brought you that listing that will list the property on the back end. But, we strive to really focus on implementing that business plan to execute that operational strategy. Once we achieve that, the disposition goal is going to pretty much be obtained itself. So that's what we do from a full, step-by-step A to Z type of approach.
Yeah, I mean, just to walk that through again, you talked about really helping with the acquisition. So either working for a deal with another broker, maybe you guys have a listing or bring an opportunity to the table, but really helping with the underwriting, the analysis of the deal. Once the deal's under contract and actually going through due diligence, actually taking over the property management of the deal, That way you are kind of a partner throughout. And then once the deal is kind of stabilized and, it's ready for the disposition, either you can help with the disposition or you partner with kind of that broker who maybe they brought on board to sell the asset. And I think the thing that really jumps out to me is, it is full cycle and kind of a full suite of services that you don't see a lot of firms offering. I mean, most firms are either a brokerage where you focus on, finding sellers and working with the current owners to get those listings, or maybe you're a buyer's agent, which you don't see as much on the commercial side, or you're a property management company, and maybe as an individual person, you have the ability to do some, but typically those companies are on a small scale, 8-unit building, a 6-unit building, something like that. You don't see kind of that full service suite with a lot of companies on some of the larger properties. How did you get into this side of it? I know your background is as a broker, but how did you get into kind of building this company and decide that this was the model you wanted to go forward with?
Sure. So, I started as a broker for a large brokerage company here in Atlanta. And over the 4 to 5 years that I was with them, it was just heavily working with the owners, sellers of multifamily buildings. And I did well, but I was actually the lead broker in my office. There was no other multifamily broker in that particular office. In that office, they were particularly focused on office, retail, industrial type of assets. So it was a great opportunity. I met and networked and built relationships with all types of owner operators, buyers as well. But, it came to a point, I had to make a decision on where I was going to take my career. Was I going to leave this company and go to more of a larger multifamily brokerage company, or was I going to go off on my own? And so I chose the latter, and that came down to the fact that I had the support of my partner right now, my operations manager, who brought that multifamily property management experience. And I said, you know what, we have something here. If you and I team up, now we can bring more value to the client than just going to a brokerage company and being a broker. And so I saw so many different investors benefit from management companies that also understood the asset management of the property and actually could understand the financials of the property. And so for me, I said, here's an actual value that we can bring our clients and our partners. And so that's how I started building out the management business and sort of, I wouldn't say I've left brokerage alone, but it's not, I don't want to compete with the brokers that are bringing listings. So a lot of times what I do now is network with brokers, and they know that we have the management side of the business. So they'll send us deals as a principal, and then we're able to either identify a partner to acquire the property with, or, provide that third party service. It just depends on what the buyer is needing. I mean, some buyers out here are sophisticated enough that they can take down a deal and all they need is a management company. And so we sort of kind of moved into that space so we don't compete with where the extra deal flow is coming from.
No, that makes sense. Obviously, you don't want to compete with the listing agents if the listing agents are feeding you deals. You started to allude to it a little bit, but given that you can kind of be that third-party property management company or kind of a partner in the deal where you're getting the deal and you're kind of identifying that other partner, maybe you could talk a little bit more about kind of the structure. I don't want to get deep into fees, but I guess the question is, are you getting an equity stake in some of these deals, or are you really just doing more of a fee-based approach?
It depends. So for majority of our clients, we're going to be more of third party and we're going to be fees. And that's just because, most people that come to us are looking just for that management type of partnership. Now, there are some both private equity and some sophisticated operators that like our model and then want us to come in and they don't believe in the third party management space. So they want you to have an equity position in the deal. So that's where that other option, but majority of it is going to be fee based. You're going to have, we're set up to have our operations managers who are sort of like, you might heard of regional managers. They oversee the on-site management, and then we have an on-site dedicated management team for that property. And the one thing I would say that, sort of separates us from a lot of other management companies besides what I've already mentioned is our portfolio size. We're not looking to scale and just have like thousands and thousands of properties under management, because we find that, at least from my experience, the value comes in being able to really put attention to the portfolio you have. And then, a lot of times larger companies, once they have an owner operator that's given them a couple thousand, units, at that point, they're like, okay, well, this is a priority client. And then you or whoever the buyer is that might only have that 40 or 50 unit kind of gets stuck in the back, either with, maybe not their elite level staff, or with just not even having the attention or the services that you're expecting. So, I mean, when you're looking for that asset, or when you acquire your asset, it doesn't matter if you have 2,000 units or 50 units, you care about all of your units the same way. So that's why we're modeled the way we are, and we have both the third party and the partnership abilities to take down a deal.
Yeah, Whitney, maybe you can elaborate a little bit more, because, we talk so much about finding deals, and we talk about, attracting investors and all those kind of things. We don't talk enough about the asset management component of it. And property management is such a huge component. But, you listen to a lot of people, they would make you believe that it's simply as easy as you hire a third party manager, wash your hands, and collect money, right? And
Right.
we all know that it's certainly more complex than that. Maybe you could talk about maybe some of the mistakes that people make and some of the best practices when it comes to both hiring property management, but then also overseeing the asset management as a whole.
Sure. Yeah. I think the main mistake is people not identifying a property management team that services the type of property they're looking for. So you can't go hire a property manager that specializes in A assets, but you're looking for a distressed lease up value add play, and expect to be given the services that you need for that type of asset. So I think that's the biggest mistake I've seen. I also think the second mistake would be just automatically going to the big property management company. Now, I know if we become that big property management company, maybe I'll be, eating my shoe or whatever you call it. But, I feel like you have to identify where you're going to get the most attention to your property, like I alluded earlier. I think that, especially where we're at right now, but any type of market cycle you're in, that's important. You want someone that's going to give that attention. Now, on the asset management side, I think you have the property management. Now, a lot of managers will argue that the new world that we live in today, investors expect property managers to be asset managers. So it's starting to kind of blend, but you really want an asset management team that understands the valuation of the asset, can actually underwrite the deal as if they were going to take down the deal, and then identify the key benchmarks that are going to achieve whatever return goal you have. And I think that's something you can identify up front in due diligence. As you talk to that manager or that asset manager about the asset, you're going to quickly be able to tell whether or not they're going to be able to service that property based on the conversation that you're having.
And maybe you can address that. I mean, the asset manager role kind of merging a little bit more with the property management role. First of all, let's just make sure we're clear. Can you kind of explain the two roles? What exactly does an asset manager do versus a property manager?
Yeah. So, I mean, in the quickest layman's terms, this is how I put it. I mean, the property manager is actually managing day-to-day operations, screening tenants, collecting rent, servicing maintenance issues. The asset manager supports that, but more from a financial perspective. So they're going to be identifying, they're going to be looking at your T12 or that P&L and identifying opportunities to either increase revenue or minimize your expenses. So they're focused more on the financial aspects of the property, whereas the property management team's more focused on the actual physical operational aspects of the property.
No, thank you for that clarity. Because to your point, a lot of folks are looking at it the same way, but it's really important to have someone that can have kind of that eagle eye view to
Hmm.
oversee the business, and my background's in business and marketing. And, there are certainly the creative folks and people who want to come with all sorts of great ideas, but there had to be somebody to sit there and look at the numbers in the budget and be like,
Yep.
we can't afford that. You got to find a way to do that with this budget. So, and that's helpful, right? You need that balance because otherwise, you can go absolutely wild with the expenses because
Yep.
they're spending on everything
Yep.
and not really running the budget. So that asset manager's job is to keep the numbers in line, and then ultimately they're going to be accountable to their investors and making sure that we
Yep.
hit the numbers that we projected. So you talked a little bit about some of the challenges of working with property management companies, especially those large ones, because they may not give your property the attention that you feel that you need. If you're in that situation, what do you do? I mean, do you fire a property management company immediately? Do you have a conversation? How do you address that to get some more love for your property?
Yeah, I think you always have that conversation before you go to the dramatics of firing, because the reality is you fire your management company. You also have to consider the expenses that's going to cost to bring on a new management company. I mean, there's going to be an upfront onboarding type of fee system with a new management company, because that new management company has to take your property from like a due diligence phase by identifying lease audits, maintenance audits, all that stuff. So there's going to be a cost to that. So I think before you make that move, I think you have to address, your management team that you currently have, and just blatantly tell them what you're worried about and your concerns, and see if something can be corrected. I mean, you're also going to be under a contract, so in many circumstances, it's going to be hard to cancel out of your contract, depending on the language. So.
No, absolutely. I mean, communication is so key, and having that conversation up front is such a big thing. We talk to people all the time who they just bring out their hatchet, and they go through property management company through property management company, and at a certain point, I mean, after you fire the second property management company, I would say you need to look internal, right? like,
Yeah.
like, I'm not saying it's your fault by any means. If you've gone, I'm not saying it's your fault. What I'm saying is you probably need to step back and say, hey, are my expectations correct? Maybe I'm asking too much of these guys for what we're paying them, right? Is it the expectation? Is it the budget? Is it the fact that if you're a hands-on owner, you're probably going to want things done your way, and no one's going to satisfy you, right? Because they're just not going to be on it the way you would expect someone to be on it. And that comes down to the size of the property as well. Because if you're not at a scale where you have an on-site manager, then it's tough because you really need someone who can be there, and pick, for me, it was like, trash. That was my thing. Like if I saw trash in a parking lot or, in front of the building, it would just eat me up, right? Or mail
Yeah.
piling up. So whenever I went by a property, if I saw mail, if I knew a unit was vacant or there was, the mailers or circulars that they throw everywhere, I would always clean that up. And I would get so upset that my property management team wasn't doing this. And I finally called them and they said, listen, that's not in our agreement. Like to do that, first of all, I need to know, I need to come by the property because this was a smaller property when I was starting out. It was an 8-unit. So
Oh, gotcha.
they're like, we're not there. So
Yeah.
we're at our office. We don't see that property unless there's a reason for us to come out to the property. So that's not happening. And at that moment, I realized, okay, this is some of the things on a small property you have to deal with, right? So you can't physically be there. So either you're going to do it or you're going to have to pay an additional fee or get that in your contract. But don't assume that it's in your contract. I assumed it was in the agreement because it's like, well, this is how you manage a property. You have to be there. You have to do this. You have to do that. And they're like, no, that's not really included. So obviously on the bigger stuff where you have an on-site manager, you have someone who's walking the grounds on a daily or weekly basis. So you should be able to catch some of these things. But maybe you could talk about some of the things and those expectation gaps, because obviously, again, a lot of folks will have you believe that all you have to do is hire a third-party management company and you walk away. But there's some expectation gaps that are included in that. So maybe you could walk into either your experiences or some of the frustrations that you see when you do talk to other owners.
Yeah. So those are great questions. And that's interesting. I mean, I was going to say, wow, they didn't care about your property enough to see that there was trash. But now you saying that is 8 units, that makes sense. They were virtually managing. But anyway, so, I mean, the biggest thing that I see is there's this gap in expectation on fees. You've kind of talked a little bit about it, but there's going to be fees for lease audits. There's going to be fees for maintenance audits. There might be fees for inspections. And a lot of people get, a lot of owners or buyers, new buyers, mainly new buyers, because the ones that are seasoned that have sort of done this for a while, have a few units under their belt, they already know what to expect. But the newer buyers get kind of sticker shocked. I think they're thinking, management fee is going to be 3% or 5% every month. And that's it, and there's pretty much, if you're an owner of a property, everything is on your P&L. I mean, the management company has their own personal expense line that they're going to have to address and cover, but you own the property. We are a third party. We're a service provider. So I think that's the biggest gap. But, at the same time, that created opportunities for us at Intuitive, because I felt like now we can say, hey, we'll partner with you. We care about this property and this is how we're doing it. But I mean, in general, if you're hiring a third party management company, you got to remember they're a service provider, just like if you had anyone mowing your lawn, cleaning your house, whatever it is. They're not going to, they care about the property, but they're going to have a different relationship with the property than you are as the owner.
Whitney, and obviously I know not for you, but generally speaking, what's the different mindset between being a partner involved in a deal, maybe having some equity upside, versus simply being third party? And I'm not talking to that. I'm not trying to infer that you treat your clients differently, but there's incentives, I would guess, and maybe places where you could be more flexible on fees and things like that. But maybe you could give us a little bit more context.
Yeah, it really depends, because I was actually reading a book by Gene Trowbridge. It's a whole new business. It's an awesome syndication book. I had to read it like 3 times because the legal jargon was not, I know the legal jargon is just not something that, your everyday person can maybe understand. But my sister, who's an attorney, she laughed. She was like, "You're reading an attorney textbook like right now." But anyway, he mentions a lot about the difference between like being a service provider and then being that owner operator. And one of the things that I got from him is that, if you are providing a service, that service should be paid for. Whether you're the partner, third party management, that is your service, that is your skill. Some may argue different. I think there's more negotiation possibly as a co-owner on a deal, a partner on a deal. But I think in general, at least from my perspective, I think you should manage third party or partnership opportunity the same way, and the fees are the same. Now, that might mean you don't own as much of the deal. I don't know. It just depends on how you structure the deal. You might own most of the deal. It depends on what you're bringing to the table. But I generally live by the rule, like my management services, that's a business. That's something that costs me money. There's hurdles I need to meet as a business owner. And when I go into a partnership, I'm looking at, okay, can I meet my goals as well as be a partner in this deal? And here's what I'm expecting to be able to meet my goals. And that's the same as a third party manager. So I can't speak for all managers. There's a company here. I'm actually really good friends with the COO of this company and coach's daughter. And this particular management company, all they do is third party management. And I know that in order to meet their goals as a company, they're having to provide the service they need to provide. And you wouldn't miss a gap from hiring them as third party management versus having a manager that's a partner in the deal. So hopefully I answered your question.
Yeah, absolutely. Absolutely. They're standalone services. So not necessarily a benefit. So in that case, if someone were looking to partner versus doing the deal by themselves, is there anything else? Is it just capital basically to say like, hey, we're looking for a capital partner? Or are you guys interested in kind of being a capital partner? Or is there any other advantage in partnering versus just hiring a third party?
So I would think it depends on the management company. So we have like a network of not only capital money, but we also have some sponsors and we have different resources that I think brings additional value that as a partner you would if we have a one-on-one meeting, you would be like, okay, well, Intuitive Management Partners is probably where I want to go because they can also help me get the equity that I need. And so I think you have to also bring other things to the table to bring value. And that would be your decision, I would think.
God, it makes sense. And personality too. I think one thing people don't spend enough time thinking about is if you're going to partner, make sure that, you get along, that you understand, understand the business the right way. And I'm not saying get along in the sense that you have to be best friends. What I'm saying is that there's mutual respect, that people are, talented in their respective areas and that they can deliver and there's accountability there. So if you can do that, then you may be set up for a good partnership. But just keep in mind that it's not about just getting the deal done. It's about being in the partnership for the life of the ownership, whether that's 3 years, 5 years, 7 years. You want to make sure you're getting in bed with the right partner so that you can have the right vision as you move forward. We've talked a lot about the property management side of things. I actually want to back up to the acquisition and then come all the way to the end of the disposition real quick. But on the acquisition side, once you mentioned that you guys have the ability to analyze deals as well. So as you're looking at deals, analyzing deals, first and foremost, let's talk about the state of the market. What are you seeing today? I mean, we're in the middle of COVID still. Who knows when that is ever going to end, but we're in the middle of COVID still. Yeah. How are you looking at deals? Are you seeing heavy deal flow? Are you seeing deals light right now? Tell me a little bit more about the state of the market.
So, great question. So we could be here all day if you want to talk about it. But it's actually picked up recently. I am seeing more sellers kind of enter the market. Back in April, May, even early June, it was slow. It was the only transactions I seen in my market were really like big time players that were out of market investors, or maybe someone that was in a deal pre-COVID and they closed after COVID, or after COVID hit. But right now I'm starting to see people enter. A lot of deals are coming off market. They're still hitting some of the bigger brokers, but sellers, for whatever reason, maybe they don't want their properties to look like a distressed asset. I don't know, but a lot of them are doing off-market deals where they're kind of just testing the market to see what kind of offers would be put on the table. I've looked at probably, anywhere from 10 to 15 deals in the last month, and nothing's penciling right now. So there's still that gap where sellers are expecting this and buyers are expecting this, and it might be because the debt markets have changed a little bit. It might be because we're in a pandemic and people just expect a discount, so there's still that gap. And then, operationally, we're getting to a point where with the stimulus drying up and everything, and the CARES Act, the extra $600 a week in unemployment, we're getting to a point where now we're seeing higher bad debt, higher delinquencies. The evictions, even in some states where the moratorium has ended on evictions, you're talking about now courthouses are being flooded with requests on evictions. And so they can't service it in the same time frame as they did in the past. So, it's kind of scary, I guess. I don't want to scare people that are listening, but, you don't know what's going to happen. I believe there's going to be additional money provided to the economy. I think there's going to be another stimulus. They've talked about it. I think there's even going to be an additional unemployment benefits package. I don't know what that'll be, but I think we need it. I think, it's still, unemployment is still extremely high. And I think, we have to kind of support everyone in trying to get through this. It's tough because, you have opposing sides of the table. You have the resident, you have the owner. But I think if we did put more money into the economy, that would help both sides a little bit. I don't know. I don't want to make it this political. But in general, that's what I'm seeing. I still fundamentally, in certain markets, I still see multifamily as a asset that's going to survive. As far as underwriting goes, for us, we're looking at, no rent growth for like 2 years. I think in the third year, you might see a spike at, 4 or 5% rent growth, just because of pent up demand. But you have to be conservative right now. And you definitely want to be mindful of the markets that you're acquiring in. Even if unemployment's high in those markets, if it's a market that's, like an Atlanta market where there's tons of jobs moving here, great weather, great opportunities, I think you can still take down an asset and really come out of this thing on top. But yeah, I mean, in general, it's just a uncertain time that we're living in. And I can't believe we're still talking about this in August. I really thought, like, my birthday was in May. I thought this was all going to be over, but this is like a real thing. And it's scary because you start this pandemic and you didn't know anybody with it. And now we're seeing tons of cases. And I'm sure most people have seen or know somebody that has it. So, but yeah, that's what I'm seeing right now.
No, I appreciate that. Thank you for that context on the market. And obviously, we all hope this thing ends soon. And hopefully by the time this comes out, we have some clarity on the stimulus package and all that kind of stuff. But I do want to talk a little bit more about the market of Atlanta. Clearly a big market, a big DMA. And, when I think about Atlanta, I certainly know a lot of folks who are looking in Atlanta. Not a whole lot of folks who are actually doing deals in Atlanta for some of the reasons you stated. I think there's still a gap nationwide. There's a gap between seller expectations and buyers' prices.
Sure.
I had a guy give a quote that was, I think, pretty spot on. He said, buyers are anxious to buy right now and owners are kind of afraid to sell because they don't want to sell at a point where, the market continues to do well, which quite frankly, multifamily and the stock market have still done really well up to this point. And they don't want to sell based out of fear. They also don't know what's around the corner. So it's kind of this situation where they don't know what to do. And there's just really a gap because while buyers are anxious, they still are expecting a bit of a discount, or for the most part. So the pricing expectations are way off. I literally just emailed a guy this morning. He had a smaller deal, but close to me. And I said, it was listed for $2.4 million. And I'm like, I think this is worth 1.5. Like, how are we so far off?
Right.
And, I'm like, how are we so far off with such a smaller deal? And it's just funny, but just to give you some context there. But with that said, as you look at the Atlanta DMA, certainly there are areas that are seeing more growth, more excitement, more deals taking place, more transactions. Where are you seeing that energy in the Atlanta market? Where's more of that excitement? Where's that investor desire to invest?
Yeah, I mean, over the past like 5 years, it's really been Clayton County, which is south of the airport. They've seen the highest rent growth out of any other area of the greater Atlanta market. But I live in Cobb County. I am maybe biased, but Cobb County, you can't go wrong in that Marietta, Smyrna, Austell space. It's usually hard to find a deal there, but that's actually been where I've seen a lot of deals available for sale. And you get a great location as far as like, you might see some B, C assets, but there's a ton of A assets that surround those product types. I like the East Side, Decatur. I typically like anything that's really outside of the Atlanta market, unless I like the Upper West Side, but there's not as many resale product there. There's a lot of new development going there. So, Midtown and, Buckhead, of course, they're great areas, but you're looking at an A asset type of product. You're going to probably be developing there. But if you're looking to acquire resale, I mean, you're going to want to go outside of that Atlanta radius and get into the greater Atlanta market.
No, I appreciate that. Very helpful for anybody looking to invest in Atlanta. It's always one of the top markets for growth. Like you said, great weather, great jobs there, good growth, a lot of attractions to the Atlanta DMA, but trying to get a better sense of where some of those opportunities may be. So if you're interested in the Atlanta market, maybe you can follow up and get a little bit more context here from Whitney. Whitney, before we go to our bullseye round, I do want to talk to you about the disposition side of things, right? So we always talk about the acquisitions, property management. What about the disposition? I mean, what's different? What do we need to prepare for? Because I think some people just assume you just find a broker, you list it, and you sell. And clearly there's a lot of steps there that we're missing. Maybe you give us a little more context of kind of what you have to do in that process.
Yeah. So, on the disposition side, I mean, you think that like the job is done, so you can kind of wash your hands. But I believe that's where the job is it continues to be just as important. You kind of have to execute all the way through. And what I mean by that is really identifying the opportunities in your property and addressing those issues. Like, sometimes you'll get a seller that might just fill any type of residence into the units just to get it, to look like it's occupied. And then you're a buyer and you're faced with these these situations, the delinquencies or bad debt or whatever. But I believe if you want a good reputation in this business and you want to be a good operator, you need to manage that property as if you're not even going to sell. And if you were going to buy that property, how would you want that property managed? So I think it goes down to that, just fine tuning the numbers, fine tuning your residents, identifying any major opportunities. And you might not, address CapEx issues, but just knowing those issues and I mean, I don't think there's anything wrong with being upfront, just from the start. Listen, the roof is 20 years old, you need this, you need that. And just, even if it's providing them a PCA, the product condition assessment or whatever upfront, and just letting them know the condition of the asset. I mean, it'll save you a lot of time. It'll get you the right buyer and you'll close a lot quicker. So I just think, in summary, I think it comes down to just, maintaining, addressing key issues and making sure you're like show ready. Like if you were showing your house or anything like that, make sure you have an asset that's ready to be sold.
No, Whitney, I think you nailed it. I mean, those are such just phenomenal insights to understand what we have to do to prepare. And I love your point about being transparent. I certainly come across people who just try to shove, residents in there. And you're looking, once you get into due diligence, you're looking like, oh, these people just moved in 2 weeks ago. And you're looking at, their application, if you can get that, which by the way, if you're ever in due diligence on a property and you see those red flags where some folks have just moved in the last like 30, 60 days, especially if it's like an abnormal rate, absolutely make sure you pull that application and ensure that they actually qualify. And it wasn't just, sticking people in there because they didn't care about whether or not they could pay rent beyond 30 days. But to that point, the transparency is there. I think for us, if you can find an owner or seller who is upfront and lets you know, hey, here's where you're at, here's what to do. Those have been our best properties. The ones where we've had those conversations where we had a sense of what's going on. They pointed out, they would tell you like, hey, these residents here have had some challenges paying, or, we've had some real issues with them for different matters, or the roof's probably, near the end of its life, but it's working now. And they'll tell you flat out too. And I'm not giving you a credit, I'm not giving you a credit. So you buying it as is, but I'm letting you know, you probably need to plan for it at some point. And I think that transparency just makes it easy to do business, because for them, their ultimate goal, when you're in the seller position versus being the buyer position, you're looking for someone who's going to close. And surprises can threaten a deal. And if someone doesn't know that water heater needs to be replaced, or even if you feel like they should know it, if it's something that they don't know and then they go through inspections and then they're surprised, that could kill your deal. So if you're banking on that, that's something that you want to monitor and make sure you work out. Let's go on to our bullseye round. You ready?
Sure. Yeah.
All right. Give me a failure or an apparent failure that sets you up for later success.
Well, I think depending on how you look at this, I'm gonna call this a failure, but this wasn't a failure. It ended up being a positive. I actually started my career in the corporate world and spent 11 years of what I call wasted time, but it really wasn't. I learned some skills that have enabled me to start my own business, but I consider that sort of a failure success, because there's time wasted, but then, I had to twist it in my mind to say, it was really a success story because there were some skills and experiences that I had in the corporate world that have put me in the position today.
Hey, there's no time wasted. You just figured out what your passion was. It was something different. All right. Give me the book you've recommended or gifted the most in the last year.
That would be Adapt by Blaine Strickland. So it's funny because I just read it literally like December, November time period. And he talks a lot about adapting to the times, like disruptions to the economy and to your business. So, and then the pandemic happened. So, whether it's technology, whether it's new systems, new tools, it's a great book. It just makes you look at your business, or maybe you work for a corporate company, and you're interested in doing a different hobby. It just makes you think about and aware of potential disruptions to your business, and how can you navigate your business to still overcome those obstacles.
Give me an app or digital resource that you recommend the most.
It just depends. For marketing and relationship building, it's been LinkedIn for digital. But for my business, it's RealPage. We use their investment management software, and I think it's one of the best. I haven't used all of them, but those would probably be my two.
Give me a daily habit that helps you stay focused on your goals.
Oh, that's easy. That's working out. Like, I literally every day get up early and walk like 7 miles. There's a track. Now, this started as the pandemic happened, because I used to just go to my trainer early. But now that, I don't really ever go to the gym, now I do everything outside. So there's a track about 1.5 miles from my house. I walk to that track every day, do 20 laps, walk home. I get my 7 miles in.
Woo, 7 miles every day. All right.
Yeah.
I love it. What's one thing you know now that you wish you knew when you were starting out?
I wish I knew about multifamily investing. Like, I grew up, both my parents, hard workers, corporate, still working, doing great, taught us great skills and lessons. But, I didn't really have opportunities to see this side of financial freedom and multifamily investing. I didn't learn this until 5, 6, 7 years ago. So I think that would be the biggest thing.
What are you curious about right now?
When this pandemic's going to end, who's going to be our president? So those are probably the big things right now.
There you go. All right. So we've talked a lot about Atlanta, the Georgia peach, the A-town. There's a lot of places to eat there. I like Atlanta. There's a lot of good food there. Give me your best place to grab a bite.
Actually, I'm a little bougie, listeners, but Marcel's, it's a steakhouse it's a fancy steakhouse in Upper West Side is what we call it now. We stole New York's submarket, but it's West Midtown. It's called Marcel's.
We'll make sure we check that out next time we're in Atlanta, whenever travel opens up and it makes sense for us to come out that way again. But Whitney, listen, I really enjoyed our conversation. I love the way you broke down really just the property management, the asset management side of the business, what it takes to acquire that property, identifying the right property managers, the skill sets that they need, understanding what your expectations should be. But then also, as you get through to the disposition side of things, what you can do to prepare to make sure that you are setting yourself up to find a great buyer, someone who's going to close the asset, and ultimately make your money as you go full cycle. For listeners who want to get in touch with you, learn more about your company, maybe learn more about investing or property management opportunities in Atlanta, what is the best way for them to reach out?
Yeah, so you guys can reach out to me on social media. We're on LinkedIn, Instagram, and Facebook. It's Intuitive Management Partners. Or you can contact me directly, Whitney at intuitivemp.com.
Whitney, thanks again for coming on Target Market Insights, the Multifamily Marketing Show.
Thanks for having me.